Hey there, and welcome back to Local Marketing Secrets. I'm your host, Danny Liebrandt, and today I'm with Adam Coffey. If you don't already know Adam, he is a three-time CEO of national private equity-backed service companies, two of which he scaled to over $1 billion in enterprise value. Over the course of his career, he's led 58 acquisitions, delivered an average of 5x return for investors, and overseen more than $2.5 billion in deal value. He's also the #1 best-selling author of the Private Equity Playbook, the Exit Strategy Playbook, and Empire Builder, with all of his books topping Amazon's charts in the business category. Today, he advises CEOs and private equity firms through his company, the CEO Advisory Guru, and speaks around the world on business growth and M&A. So if you want to learn how to build a $1 billion company that you can sell, Adam will break down the 4 stages of growth in this episode. So without further ado, thanks for coming on the show, Adam.
Hey, Danny, it's good to be here. Hello to all your listeners out there.
Yeah, so glad to have you here. So I want to jump into the 4 stages of an empire, which is so funny because I identify them on my own, and you actually have them in your book, which I'm yet to read, the Empire Builder one. So I want to jump into these 4 stages of building a $1 billion company, which would be 0 to $1 million, $1 million to $10 million, $10 million to $100 million, and then $100 million to $1 billion. So first off, let's start with where most people are at right now, which is 0 to $1 million. Why is everyone stuck at 0 to $1 million? Why is everyone struggling here?
Yeah, Danny, it's like, these are great questions. And so I want to start with, before we even started the business, let's just talk really quick about what kind of business should I start? So if I'm working for somebody else, I'm out there, I haven't started a business yet, how do I pick one that's going to be successful? And so, I want to talk through a little bit about this. So first of all, let's talk about needs versus wants. If my roof is leaking, I'm sitting in my office and it's raining on my head, I need to fix my roof. I don't have a choice. I can be unemployed, the economy can suck, stock market can be crashed, but I'm still going to need to fix my roof. Needs versus wants. Versus, I want new tires for my monster truck, sitting out there. It's like, I got a 700 horsepower, Dodge TRX, a Ram TRX out there. It's like, I want bigger tires. I don't need, I want. But if I'm unemployed, if the economy sucks, if I don't have discretionary money, I can forego, spending money on wants. So if I'm a needs-based business versus wants, then I'm going to do better in a down economy. That's number 1. Number 2, I want contracted revenue versus project-based revenue whenever possible. So you mentioned pest control when we were backstage still, and so pest control is my proxy of just the perfect business. I'm going to sign a contract with a homeowner. I'm going to hit their credit card every month. I'm only going to go spray once a quarter. So every month, my revenue every 3 days after I bill it, it's in the bank. It's like, and every time I use a company like yours to go out and build my client base, a new client is additive to the old client. And so I'm building this steady recurrent revenue. It's contract based. So I'd rather have contracted revenue, recurrent revenue versus project based or one-time revenue. If I'm that roofing company, it's a need. But if I need my roof replaced, Adam doesn't need a new roof every month. So I need one every 15 years. So you get me this month, next month, you're back at 0, looking for a new client to go from 0 back to where you were when you had me the month prior. So needs versus wants, contract versus project, and then I want low capital expenditure versus high capital expenditure. So pest control, good proxy of what I would call a relatively low capital expenditure business. I got to buy some trucks. I got to buy some sprayers. I got to train some people, give them some uniforms, but that's about it. If I'm a construction company that's doing heavy construction, I need dump trucks and graders and all of this really expensive stuff. And why does this matter? Well, if I'm starting a business or I'm going to buy a business, I need the cash flow in the company I'm building to generate enough cash flow for me to service the loans if I'm buying it, or if I'm going to grow it rapidly, I'm going to need capital to invest in growth. So, I want, fill these buckets: needs versus wants, contracted recurrent revenue versus project, low capital expenditure, which means high free cash flow. This would tee up a great industry for all the entrepreneurs out there to think about going into if they haven't started. So now let's go to your next question, which was, 0 to a million. Why is it so damn hard? Let's start with some statistics. Only 7% of business owners out there ever get to $1 million in revenue. Of those, only 4% of the 7% ever get to 10 million. When I was doing research for the book Empire Builder, I actually started as a seminar. I was like, why is it so damn difficult? Why can't people get this right? And so what I discovered was the road from 0 to a million, very unique. I'm going to call it, you have to focus on being an anal retentive control freak, and you have to focus on unit level economics. So let's talk about unit level economics for just a minute. What does that mean? What's my unit level economics? So we've been talking about pest control. So let's use pest control as a proxy. So my unit level, the smallest unit level of a pest control company is one truck, one technician, and the sprayer. How much does it cost me to hire that technician, to train that technician, to put them in a uniform, to put them in a truck, to have the equipment on the truck that's required? It's like, what are my operating costs at the smallest unit level, which is one truck? Next up, I'm going to build, so I build a model around expenses. This is not capital expenditures. So I think about, if I have a truck, I'm talking about truck payment, if there's a payment, the gas, the oil, the maintenance costs, the insurance, and I'm thinking about the sprayer, and it's not to buy the sprayer, but if I have to repair it, replace it, down the road, I'm building up maintenance reserves, uniforms, costs like that. What's the hourly salary I'm going to pay this pest control technician? And then benefits. I add up all my expenses and I think about it on a 1 month basis. So what are my expenses to have this technician in a truck on the road ready to go out and spray homes, right? Next up, I look at building a revenue model. And so the revenue model, how many homes can this person or business, can this person visit per day, per week, per month, per year? What is the total time? So I've got my typical homeowner. I'm going once a quarter, once every 3 months. And I'm charging, I don't know, $75 a month to their credit card. So how much revenue am I producing per month per truck, which is my unit level? Now I add up all the revenue potential. I subtract all of the cost. And what's left is my gross profit at the unit level. And I have this thing, Danny, I call the 30-20-10 rule. So my business, perfect business, needs to have it, I want at least 30% gross profit. And I want less than 20% SG&A, which is my sales and general administration. So a direct cost, is to earn the revenue. And then my back office costs, I need that to be less than 20%. So more than 30 up here, less than 20 there. I have to earn at least a dime on a dollar. The secret to getting to the first million is understanding, I call it napkin math, just the simple basic formula. What are my costs per unit? What is the revenue I can generate per unit? Let's say, for example, I can generate $250,000 per truck unit level for pest control. If that's the number, I'm going to need 4 trucks on the road. I'm going to need 4 employees, 4 sprayers, and so I can build what I call napkin math. I can start with 1 truck. I'm probably the guy in the truck, and I'm building my customer base. I hired you. You're getting me all these pest control clients, and then as I'm growing my revenue stream, I hit a point where I now get a second truck, and I get a third, I get a fourth. I make the first million a mathematical certainty. It's a mathematical formula, and it's based on this unit level economic concept. Now, if I don't pass the 30-20-10 rule, I don't scale. I don't add a second truck. I have to fix my fundamentals first. If I pass the 30-20-10 rule, I can build $1 billion business. But if I'm not passing 30-20-10, I stop, I don't scale. If I don't have 30% gross profit, I got to raise price, or I have to lower my cost at the unit level. If I can do these things, then I can be successful with mathematical certainty. So it's all about building the unit level economic model for revenue, for expense, and for capital expenditure. If I build these 3 models, I now know exactly how many customers I need. I know how many trucks I need, how many employees I need, sprayers, and I've just plotted out getting to $1 million. And so the key to me, and a lot of entrepreneurs, it's not that they don't understand these kinds of concepts. It's that they learn it the hard way. It's like they just get in, okay, I'm going to get 3-4 trucks. I'm going to get some people on the road. We'll figure it out. And so many entrepreneurs tell me, Adam, I'll figure out how to make money once I get bigger. Entrepreneurs are focused on revenue, and they shouldn't be. Screw revenue. I don't sell revenue. I sell earnings. And so everything is about earnings. 30, 20, 10. If I can't pass those basic fundamentals, I've got no way of scaling a business successfully. I'm going to take a problem and I'm going to scale a problem bigger. So I want to deal with problems in the smallest unit level possible. Once I get the unit level dialed in on my journey to $1 million, I can then apply the napkin math, and I refine the formula on the way to $1 million, and I perfect it on the way to the $1 million, because that's going to be key in scaling from 1 to 10.
Okay. I get what you're saying. So you're working back. So you have to first figure out your goals and then work back from that. So if you want to, because it really depends on your goals.
I'm a pilot. I can't take off without knowing where the hell I'm going, right? And so you laid the gauntlet perfectly. I'm going to $1 million. That's my first goal. How am I going to get there? How many trucks am I going to need? Well, that depends. How much revenue can I generate per truck? And I have variables that are at play too. So pest control, good example. If I have customers spread out all over Dallas, where I'm at, Dallas, Fort Worth, then I got to drive long distances between clients, and I'm not as efficient as if I have 30 homes in one neighborhood.
Yeah.
And I'm just driving, 800 yards to get to my next client, rather than driving across town. So there's a magic around not just building clientele, but building density of clientele, clusters of clients within a certain tight geography, because I want that pest control technician to spend all their time spraying, not driving. I don't want them driving long distances. Driving is inefficient in a route-based business. And so there is some nuance there. But it starts with my assumptions. How much revenue can I generate per truck, per crew, unit level? And I'm anal retentive control freak, because it's at this stage in the business where I'm really dialing in these unit level economics, and I need everybody to operate in the same fashion. Need everybody to think the same. And if I can pull this off, I can be one of the 7% of the 34 million small business owners in the United States that hits $1 million in revenue. And I can do that relatively quickly once I understand those basic economics.
Definitely. I love that emphasis of route density, because I know a lot of owners probably feel like, that makes things more convenient, but it actually makes things more attractive from a private equity perspective. And it frees up time so that you can actually service more clients. It's not just about, now they can get home and see their wife sooner. It's no, we can service more people now. And now we can make the most of each technician instead of having them waste their time driving. I mean, why have them driving when they can be servicing and making you more money? So absolutely love it. I want to move on, because I want to make sure that we get to every single point. So now let's move on to $1 million to $10 million. Let's say you first off, pick the right business. Now you have built it. Let's say it's pest control. Maybe that might be five technicians, a few trucks. You've got route density, you've got a CRM. Now things are kind of shaping up and starting to form. How do you get from that 1 million to that 10 million?
So if the journey from 0 to 1 million is all about determining and perfecting unit level economics, the journey from 1 million to 10 million is now replicating those same unit level economics. And so if it took, in your example, if I needed 5 trucks to get to $1 million, well, then 10 million is 10 times that. I'm going to need 50 trucks on the road. I can take my customer count times 50. I can take my or times 10. I can take my number of trucks, my number of employees. I can now scale up my model. And again, it's still napkin math. This is still relatively simple. In most businesses, if I'm in some kind of a major metropolitan area, like a Dallas, a Fort Worth, an Atlanta, a Miami, pick any large town. If I'm in a large town, then in just about any industry on the planet, I should be able to stay within one market. It's called an MSA, one metropolitan statistical area. And so MSA, I could stay within one MSA, and I can go from 0 to $1 million to 10. Now at 10, as I go up, we're going to start having to think about spreading our horizons and getting, out of just one MSA and getting into multiple MSAs. But on the journey from 1 million to 10, I take everything that I've learned going from 0 to a million, and I now replicate that napkin math going from 1 to 10. And something else to think of is, if I passed the 30-20-10 rule and I had my business dialed in at a million, I actually should be getting more profitable on the journey from 1 to 10 million. Why is that? Well, if I need 50 trucks to get to 10 million, I'm going to be buying more than one truck at a time. And so when I'm buying more than one truck at a time, if I'm buying 50 trucks, I'm going to get a better price than if I'm buying one truck. If I'm buying 50 sprayers, I should be getting a better price than if I'm buying one. If I'm buying chemicals, I should be getting a better price on raw materials if I'm buying 50 versus buying one. And so I should be getting economies of scale on the road from 1 million to 10 million. So if I'm passing 30-20-10, let's just talk for a second about, how do I build the back office? What's the framework that I use there? So let's think about revenue. For every dollar of new revenue I bring in, I'm going to generate minimum 30 cents of gross profit. I'm allowing myself 20 cents of back office costs, including marketing and customer acquisition, accounting, payroll, HR management, all that stuff. I may be outsourcing it, but I'm allowing for that kind of expense. And so I can now put 20 cents in a piggy bank. And the way I think about expense and back office, think of it like, I want to keep the trains running on time, barely. And so I want to build revenue first. So revenue leads, expense lags. So as I add $1 million in new revenue, I now have 300,000 in gross profit and an ability to add up to 200,000 in back office expense. And so what I teach entrepreneurs to do is to build a wish list. I wish I had a dispatcher. I wish I had, a digital marketing person in-house, and to work with my outsourced lead gen company. I wish I had, a service manager. I wish I had, an accounting, clerk or a controller. Put all your wish lists together, rank them in order by if you were going to hire them. It's like right before the train falls off the tracks, who's the person you could hire to keep the train on the tracks? And have them prioritized. And so as I'm adding revenue, I'm now building a piggy bank. As I'm building dollars in that piggy bank, I can go shopping by looking at my list of people I'd love to have in the back office. And so I'm earning my back office while I'm scaling. And so we have to lead with revenue. Direct expense is a given because we have to service the customers in order to earn the gross profit. But then with the gross profit dollars, I'm investing in arrears, or kind of, I've got the revenue first, the gross profit first. Now I'm adding the expense element on that journey from 1 to 10. I'm still an anal retentive strategic control freak, because my total employee count, if I got 50 trucks on the road, is probably less than 60, at this point. And so I've got my technicians, I've got some structure or skeleton of a back office. I'm probably still outsourcing a lot of things, and I'm paying by the drink. But as I'm building that business, it's somewhere on that journey from 1, as I'm getting closer to 10, I now have to shift entrepreneurial gears. And instead of becoming an anal retentive control freak, I now have to become a manager of process. And so I've taught my company the unit level economics going to 1 million, but I don't have much staff. Now on the journey from 1 up to 50 trucks, probably those first 5 truck, guys are now potentially supervisors, of the other 45 worker bees that I've got out there. Maybe one of them was exceptional, or 2 of them, and I've got a service manager or 2, and I've got some supervisors. And so I built that structure. And on the road from 1 to 10 million, I've taught that core group, and I started building my back office process, procedures, and controls. And so now that I've got all that in place, I'm ready to go beyond 10 million. But now I have to stop being the key decision maker. I have to stop managing detail. I have to start managing process. And I have to rely on the processes I built in the first 10 million to now be run by others in order to find that gear that will eventually let me get to 100 million. Because most entrepreneurs, so I bought 58 companies, in my career. As I'm out there buying companies, I'm typically buying from an entrepreneur who has plateaued. And so somewhere around 20 million in revenue, maybe 30 million, depending on the trade, they have just kind of tapped out. They were an anal retentive control freak. They make every damn decision. They empower nobody to think, and they're out of bandwidth. And so their company just stalls out. No more growth. Guy like me comes in, buys theirs and buys 22 or 23 others just like them, puts them together. And I'm managing process. I'm a conductor of an orchestra, not a player, within the orchestra. And I can take it to a different level. So 0 to 1, defining the unit level and perfecting it. 1 to 10, scaling that initial model, starting to create operating leverage because we're buying things in quantity and bulk, starting to build that back office. I've dialed in all my process. Now I'm ready to go 10 to 100. And it's at this point I shift gears and go from anal retentive control freak to manager of process and people.
Okay, awesome. A quick follow-up question there. How important are A players? Can your technicians kind of be anybody, but then you actually need some super high-level people in your C-suite? What does that look like?
Well, so I'm going to build my C-suite over time. On the journey from 1 to 10, I'm not hiring C anything. There's no COO,
Okay.
There's no CFO. I'm hiring a controller. I'm hiring a service manager, and I'm building management slowly, and I'm keeping the titles somewhat depressed because my company is small still, relatively speaking. And so I don't want to over title people yet, because as I'm getting bigger on the journey from 10 to 100, I may need to bring in talent above the people I've got. And so I need to maintain that flexibility. So the person I hire as a controller or an accounting manager, may wind up, I might need a vice president of finance on the road from 10 to 100. And it may be that person who was the controller, but if that person doesn't have the bandwidth to grow, I may need to bring in someone over them. And I want these titles to remain open. So I'm very judicious about what, and how we would title people in these early days. But to your point, look, any company is going to have a mixture of people. We didn't talk about it, but culture is really important. If you're going to grow a business, you're going to need employees. If you want to build $1 billion business, you're going to need more than 1,000 employees. You better have a strong culture. That doesn't mean I coddle people and they get free yoga at lunch and we don't care about accountability. I'm going to push the hell out of them. I'm going to manage them with metrics. I'm going to demand, high levels of performance, but I'm also going to take care of them. And I'm going to give them exceptional benefits, and I'm going to be transparent as a leader, and I'm going to be, the chief motivation officer, the chief entertainment officer. I'm going to make sure that I've got a transparent culture. These people are going to love working with me, and I'm going to have the best benefits in the industry as I get this train rolling. So I do need some A players, no question. But not everybody in the planet is an A player, and I can't hire just A players. There's not enough of them out there, but I'm going to need them. So out of those 50 technicians that I'm hiring, I'm looking for some A players in that crowd that I can groom to become my first service managers. And if I need to go outside and hire from outside, I'm going to then go outside and hire and bring people in who are A players to augment the team that I've got internally. And a C player can kill your organization. So I want to make sure that I'm getting and weeding out C players because they'll drag me down, but recognizing that not everyone will be an A player, and I'm going to have a mixture of A and Bs, and there will be a few Cs that squeak in there once in a while. But my biggest key component is I'm going to need talent. And in order to get talent, I'm going to have to build a company with great benefits, good transparency, all of these things.
Okay, so next we've got 10 to $100 million. So now that you've actually built out, maybe you have, I don't know, like 50 technicians, whatever you've mapped out in your business. And now you're really ready to scale. Maybe you're starting to hire in some C-suites. What does that look like going from 10 to 100 million?
Yeah, sure. So, on this road to 10 million, first million, dialed in my unit level economics. 1 to 10, I replicated them within my current MSA or my current metropolitan area. Now to go from 10 to 100, I'm most likely going to have to start expanding my reach. And so I may be looking to open up new branches of this pest control business. So let's say I'm in Dallas. Maybe I decide I'm going to go down to Houston, and I want to open up a new business in Houston. So how am I going to do that? Well, first of all, I'm not going to hire a branch manager from some other company and tell them, go start my branch down in Houston. I'm going to take one of my stars that I created on that journey from 1 to 10 million, and I'm going to tap them, to go be my branch manager in Houston. And I could do this in two ways. I could do it de novo or greenfield. So I could just go, let's go get a building. Let's start buying some trucks, hiring people, and let's just start from scratch. And I do that sometimes. And so it's a very valid method of doing that. Another way I could do it is to actually find an existing pest control company in that market and buy it. So I could use mergers and acquisitions, and so sometimes the way that I think about this is if I'm going into a medium-sized market or a small market, I'm going from Dallas to Waco. Waco's a much smaller market than Dallas. Well, maybe I don't buy a company. Maybe I do it greenfield, and it's only an hour and a half from Fort Worth. And so I can surge resources down there if when I'm starting out, I need help or there's some issues or problems. But Houston's 5-6 hours away. That's a long way away. And it's a giant MSA. Millions of people live in Houston, but millions of people don't live in Waco, right? So I start Waco as a greenfield, generic, branch. Let's start with one guy, and go from there. But I'll probably buy 3 or 4 trucks because I've got 10 million business now. I'm probably earning 1.5 to 2 million a year, at the EBITDA line. And so it's like I can start making some capital investments. I'll get the building on the come. I'll buy the first 5 trucks or 3 trucks, and I'll hire 3 or 4 people. I've moved down my star from Dallas down to Waco. I now have the nucleus of building a branch. I've got Danny working overtime to get me leads in my new market, and so I'm starting to generate that one from scratch. But Houston, different animal. There's millions of people down in the Houston area. Maybe on that one, instead of starting greenfield, maybe on that one, I'm looking to buy a pest control company. Maybe it's from someone who's 60 to 70 years old, retiring baby boomer, and I move another one of my stars down there to take over and assume control of a business that's already been in business for 20 years. It has a name, a brand, it's got a customer base. And I'll just casually start bringing my process and procedures down to a business I buy. And so that accelerates my growth. So on the journey from 10 to 100 million, this is where things start to change. I'm going to spread from one MSA or one big metropolitan area to multiple. I'm going to do some of it via acquisition. I may do some of it organically. And you mentioned the C-suite. So now as I'm building that back office, at 10 million, I had a controller, I had a service manager, or maybe a few service managers. Now maybe on that early road of 10 to 100 million, I now start creating vice president level jobs. So I have a vice president of sales, marketing, a vice president of service or operations. Potentially I go to a VP of finance, and then on somewhere on that journey from, 10 to, maybe now I'm getting into the 30, 40, 50 million range. And on that journey from 50 to 100 million, now I got 6, 7, 8 branches. I've bought some, I've grown some. I'm still building my business. I'm still adding that SG&A, but I'm doing it following that rubric I laid out, which is 30, 20, 10. So for every million in revenue I add, I get a couple $100,000 to invest in back office needs, and I start filling these jobs. And so somewhere around that 50 million mark, now maybe I'm going from VPs. And by the time I'm at 100 million, if I'm at a 20% margin business, I've got 20 million in EBITDA to sell to a private equity firm. So somewhere on that journey to 100 million, now as I'm getting into, pulling into the $100 million level, I actually have a C-suite. I actually have a chief operating officer to run operations. I've got a chief finance officer to run, all my accounting and most of my back office, call it aspects. I may have a chief marketing or chief revenue officer, a chief, a chief finance officer, whatever I want to call them. I now have HR leadership in the company as well because I'm getting way more sophisticated. If I had 50 employees at 10 million or 60 employees at 10 million, I've got 600,
Yeah.
at 100 million. And so now I've got, a CHRO, a COO, built now that C-suite out. And at 100 million in revenue with 20 million in earnings, if I'm a 20%, EBITDA margin business, I'm selling that thing in pest control probably somewhere between 12 and 15 times. Let's use 15 times because the math is easy. So now I want to sell my company for the first time. I don't want to leave because this is the journey from 100 to a billion, but I do want to de-risk. I do want to get chips off the table. Danny, if this is your business or your old man's business, it's like, we want to put 100 million in the bank and I want to start continuing to be an owner, but now I want to become a minority shareholder rather than a majority shareholder. I want to use other people's money to scale even more aggressively than I've been. So the journey from 100 million to a billion, I'm now going to be buying companies as a strategy. I'm looking to buy pest control companies all over the place because I'm going from what started as a one market company to a multi-market company is now a regional company going to a national company. And so, M&A becomes a key driver. We're going to need a lot of capital. I'm probably going to sell to a private equity firm. I'm going to keep running it. So let's say, I had 20 million of EBITDA sold for 15 times. It's 300 million. I take 200 million off the table. I pay some taxes and I invest it elsewhere. My family is now set for several generations, and I'm good. I've de-risked. But I take 100 million, roll it forward, and now I have a PE owner beside me. And that PE owner, is the majority shareholder. I now have a formal board of directors. I can get fired if I don't perform. And now we're going to build from 100 million to a billion. And we probably won't get that far with one PE firm. We'll probably go from 100 million to 500 million in the first 5-year period. And then we'll sell it again. Same math. I'll take, about 2/3 home, roll about a third forward, get a second massive payday. So in numbers speak, the typical PE firm is going to model a 3x to 4x multiple of invested capital over a 5-year period. So if I rolled 100 million, mind you, I sold my company for 300 million. I took 200 million off the table. I have 100 million rolled forward. If we achieve a 3x or 4x multiple of invested capital, my 100 million becomes 300 to 400. And so my second bite's bigger than my first. I take 2/3 of it home. Now, instead of 200 million out there, I've taken 400, 500 million out of the business. Now I've got 100 million riding forward. And so I'm probably going to go from 100 to 500 with one PE firm and then 500 million of revenue to a billion, with another PE firm after that. So, and you know what? If I can run a successful $1 million business and my unit level economics work, there's no reason I can't build a 10. And then once I get to 10, no reason I can't build 100. And if I've got something that works at 100, it's going to work at a billion. Matter of fact, every step of the way, on that journey, I'm going to be creating operating leverage. I'm buying more chemicals. I'm buying more trucks, more sprayers. I've got a very efficient back office. I'm using state-of-the-art ERP systems and software. I'm focused now on continuous improvement. As I'm building that back office, I now have process experts who are analyzing everything we do to make sure that we're optimized. I'm probably now not just doing digital marketing. I'm doing television. I'm doing radio. I'm doing many mediums. And so it's like everything gets more sophisticated. But the issue is, if it started successful in the first million, I've created the DNA that lets it go to any size, and it only gets better. But if it doesn't work at 1 million and I'm scaling a problem, I'm just going to have a big problem at 10 million and I'll never see 100 million because I'll have failed before then. It's like we have to get it dialed in small. Entrepreneurs focus on revenue growth. We need to grow based on earnings. Everything's around earnings. Am I successful at the unit level? If I'm successful at 1 truck, I'll be more successful at 50, more successful at 500. But if I'm not successful, I probably never get to the size to where I make something that doesn't work small work big. And if I do, it won't work efficiently big. So, This is kind of the journey. And these numbers may seem fanciful, but people do this. So why not
Mm-hmm.
you? You just need to learn the how. And the how between success and failure is in the first million. You build the first million and you follow 30-20-10. You get better as you get bigger, and everything just works and accelerates. And so, it's fun to build and grow a company that has good, economic fundamentals. It's a real pain in the ass and a challenge when
Mm-hmm.
they don't work and you're trying to figure out how I'm going to make payroll next week. So build it right small, get it dialed in. Now scale that, keep learning at every stage. And at some point, probably around that 100 million in revenue mark, if not sooner, I tell most entrepreneurs, if you have 10 million of EBITDA, an ability to get a 9-figure exit, I want you to diversify, because there's too much volatility in the world today. And I've seen too many bad things happen to good people for reasons totally beyond their control. Acts of a government, a war, planes flying into buildings, a
Mm-hmm.
bad recession, things happen. If you've got 100 million equity in your business, we need to get some chips off the table to make sure your family never has to worry about where they're going to eat, but that's it. That's the basic journey, and it's a journey I've lived multiple times in multiple industries, and so it starts with needs versus wants,
Mm-hmm.
contracted revenue versus project. And by the way, you can make money anywhere. And not every business I've run met all of my own criteria. I just mentioned the criteria because I want an entrepreneur who's just starting out to stack the deck in their favor and raise the probability of their success. But people make money in every industry during any kind of economic cycle. But if you really want to be, raise the odds of your success, follow that framework that we just laid out, and that'll be the key to your success.
Wow. Mic drop. That was so awesome, Adam. So first off, you have to have an amazing foundation before you build anything. If the foundation is crap, then the business will be crap. And that as you grow, there are these 4 fundamental stages that everyone's going to go through, like you mentioned. One thing that I wanted to harp on a little bit is you mentioned buying companies, and that's really big as you begin to really scale. What does that look like of buying companies, and what exact level is that? Maybe is that above 10 million, and what kind of companies are you looking for?
I call it above 10 million. And so we're talking revenue right now. At 10 million on a pest control company, I'm hoping to have at least 15 to 20% net profit margin, because pest control companies tend to be fairly profitable. So if I'm earning, at 10 million, I should be earning 1.5 million. I'll call it, just let's start there, 1.5 to 2 million. If I've got that kind of cash flow and that kind of equity built up in my business, then M&A becomes a real potential for me. And pest controls do trade for relatively high multiples, and unfortunately, there's a lot of small ones out there who think I'm worth 10 times. Well, you're not. I can promise you, you're not. And that anything you're hearing at the bar is a bunch of bullshit. So, it's like small companies trade for small multiples, big companies trade for bigger multiples. And so, first of all, we have to be very disciplined. We only buy good companies. And here's something, Danny, that I think most entrepreneurs get wrong. Most entrepreneurs think that the value they're going to create comes from buying a fixer-upper at a cheap price and fixing it. And that's not where your increase in wealth, your increase in value comes from. Your value comes from just a purely occurring thing. It happens naturally. You don't have to do a damn thing to create it. And it's called arbitrage and multiple expansion. So if I use pest control as a proxy, how many small pest controls are there in the United States? Just in this country, there's tens of thousands of them.
Mm-hmm.
They're a dime a dozen. There's so many of them, in fact, there's not enough buyers to buy them all. And so they tend to trade for smaller multiples. But as a company gets bigger, so here's the statistics: 34 million small companies just in the USA. There's only 3,000 companies on the entire planet that have $1 billion in revenue. 2,000 of them are public, 1,000 are private. So I go from hundreds of millions of small businesses globally to only 3,000 kind of at the top of the food chain that have $1 billion in revenue. So as a company gets bigger, it very quickly becomes rare, and larger PE firms can't buy small companies. It would take them 1,000 years to put their money to work, and they only have 6 years in the life of a 10-year average fund to make investments. And so big PE firms with big funds buy big companies. Small PE firms with small funds buy smaller companies. And so there's not enough buyers for the smallest of companies out there. I can go out there and I buy them, but I want to buy good companies run by good people that have good fundamentals, that have a good culture. And I'm going to pay fair market value and no more. And the value is going to come from buying a handful of these and putting them together with mine that's also growing organically and integrating it. And now as I've gotten bigger, I trade for a higher multiple. So I'll give you a quick example. My last empire, I bought 23 HVAC companies and I paid on average 5 times. Because they were smaller, they were trading for about 5 times. When I put the first 8 together and sold the company the first time, that company traded for 14 times EBITDA. I had bought everything at 5 times EBITDA. And so what's the profit? The profit is the difference between selling $1 of earnings for $14 versus paying $5 to buy $1 of earnings from a bunch of small companies that I then put together, integrated, and got growing organically as well. That wealth creation is happening naturally. My value doesn't come from buying fixer-uppers or crappy companies, dogs with fleas, and then fixing them. I'm wasting time fixing them. Better for me to just go find a bunch of good companies, pay fair market value, put them together. Now I've got a team of good entrepreneurs. We're all aligned. They've gotten one bite from me, but they've rolled over. When I sell the next time, they're going to get another bite of the apple, and depending on age, we can keep on doing this. My personal record is selling the same company 5 times in 13 years, and so getting multiple paydays rather than just getting one, and working together as a part of a team rather than just being a solopreneur or an entrepreneur who built one company. I can join and band together with 10, 15 other entrepreneurs, and build something big that's special that trades for a high multiple. So A is a skill. And if you've never done this before, you can also get hurt. Right. So you need people around you to teach you how to do it. People who've been on that journey before, stack the deck in your favor. We go buy or rent the expertise that we need and we bring it to bear at our table. But definitely it's a tool. And I'd say between 10 million on my way to 100 million is where I start to deploy that in terms of revenue. And it can be an accelerator for sure. Definite wealth accelerator. And so if I created it organically, every dollar would go from 0 to 14, 15 times when I sold it. But if I can buy $1 million in earnings for 5 times, and then I can get the $10 in increase by making it a part of my company so much faster. It's instant, as a matter of fact, rather than spending all the time to build a $10 million, from scratch, I can buy, I can start buying earnings and pay low multiples because there's a lot of companies. And as I add it together with my clay, my company's getting bigger, the multiple's high. And this is how private equity makes their money. This is the number one way private equity firms make their money, is by rolling up and buying a bunch of small companies. That's why everybody out here who owns a company, your phone's constantly ringing, someone wants to buy you. It's because they're doing a buy and build. They're doing a roll up. They're buying a bunch of small companies, putting them together to trade for a higher multiple. You can participate in that, or you can do it yourself on a smaller scale.
Okay, so last thing that I wanted to touch on is you were saying how important bringing in private equity is from going from 100 to $1 billion. Can you touch on briefly of what that looks like of bringing on private equity and what you should look for firms regarding that?
Yeah, so there's tens of thousands of private equity firms out there. And where private equity does diligence until you are just ready to give up and go home because you're exhausted, most entrepreneurs don't do a good job of doing diligence back on the private equity firms. Have they owned a pest control company before? What was the outcome? How did they work with management teams in home services or blue collar services, whatever kind of industry that we're in, that we've chosen? It's like, what's their track record? I want to talk to CEOs that they fired. I want to talk to CEOs that are currently in, part of their portfolio, and I want to understand what life is going to be like working with these people, because it's an arranged marriage. And once you cede control, you're a minority shareholder forever. And so we want to at least make sure that first transition is with a party that we like, somebody that we get along with, somebody who's going to be a good steward to our employees, to our legacy, to the company that we've created. But I definitely think there comes a time and place where in order to de-risk, that means we need to bring in equity. And in private equity, the largest the largest chunk of capital is in what's called buyout funds. These funds, by their very charter, must buy a controlling stake. So I have some entrepreneurs I run into out there. I got to maintain control. I'm God's gift. I want to sell a minority stake. Well, if you do sell a minority stake, guaranteed you're getting a low multiple because the majority of capital wants to buy the majority of your company. And if you're not selling majority, they're not even going to talk to you. And so there's only a handful of people out there that are buying minority stake. They're paying way below market multiples that a buyout fund's going to pay. And so you think you have the illusion of maintained control, but even in their minority shareholder rights agreement, they can force all kinds of actions on you. There's all kinds of control. So it's like, we do need capital to grow. Capital is expensive. We want a sophisticated financial engineering firm, a private equity firm, to come in behind us to solve the capital stack. If I'm buying 23 companies, I'm an operator. I'm not a financial engineer. I'm not a debt, in a bank relationship. I'm about pest control. I'm about buying good pest control companies and putting the operations together. So I need sophisticated financial buyers at the table who can help feed me with the capital that's required as I'm scaling from 100 to a billion. And so I'm going to need a partner who's much more sophisticated than I am. I'm focused on operations. They're focused on feeding me capital and helping me grow and think through my strategy at a very high level. And so I think it's important at some point, to bring in others. And for those of you out there who think I can't be a minority shareholder in this company that I built, I'll just mention two names, Elon Musk and Jeff Bezos. The two richest men on the planet both own less than 13% of their respective companies. You can be a minority shareholder and be the richest guy on the planet. It is possible. How do you get there? You got to sell the damn thing, and so whether it's a public exit, a private equity exit, much more probable. I think that finding that financial partner, getting chips off the table to secure your family's future, these things are important. I've seen, we don't have time today for stories, but I could tell you horror stories all day long about entrepreneurs who lost everything during COVID. Not because they didn't know how to run a good business, but because the government decided they weren't an essential business and it was time for you to close your damn doors, and then, acts of war. When Russia invaded Ukraine, one of my clients in the UK, his largest customer was in Russia. And they weren't making weapons, but the UK government said you can no longer export anything to Russia. And so everyone thought it would be an 8-day war. Well, 3 years later, guess what? They're still fighting. He can't sell to his largest customer. And he went from healthy business to damn near bankrupt overnight by an act of the government. So bad things happen all over the place, and they seem to happen quicker in today's world. So I worry about you. Once you build success and you've got some level of net worth embedded in your business, we have to extract it and get it into the bank and invest it elsewhere. Keep building our company, but de-risking the platform so that way our families are taken care of forever.
Definitely. Man, everything you say is right on the spot. It's just gold. I cannot stop listening to you. So I think that's a good place to wrap up. I wish we had more time. Maybe we'll even do this again. But thank you so much for your time, Adam. And where can people find you, learn more about you, work with you potentially, and all that stuff?
Yeah, chairmangroup.us, or you can find me on LinkedIn. I don't have an army of people on social media who are doing stuff for me. LinkedIn is my most active platform, and that's where most of my clientele comes from. So people who read my books or hear me on a podcast, go to chairmangroup.us or come see me on LinkedIn. Just spell my name correctly and you'll find me. And when you reach out, you get me. So those are the two best places to find me.
Awesome. Yeah, definitely make sure to go read Adam's books. And this podcast that we talked about, this was maybe 50 minutes or so. I'm talking about 0 all the way up to $1 billion is really what's all in his Empire Builder book. So make sure to read that if you're interested in this topic in particular. And yeah, again, such a great podcast. Thanks for coming on, Adam.
Good to see you, Danny. Good luck to everybody out there.
Appreciate it.